Everyone, today we will be looking at your accounting paper 2 November 2020. It's 2020 second paper because it's written 2 here. So we will be looking at your question 3, which is budgeting. Getting straight into the question 3 says Blossom Pty Ltd sells expensive ladies dresses of high quality. They also repair dresses for customers, but they aim to break even on this service. Customers are allowed to buy dresses for cash or on credit, but they are required to pay cash for all repairs. So what they do is they repair dresses and they also sell expensive dresses. Alright, so we're doing this question for 40 marks in 30 minutes. Alright, so the information relates to the budget period ending 31 May 2021, and then 3.1 says complete the debtors collection schedule for March to May 2021. Alright, so we are moving on. What we're going to do, we're just going to get our answer book closer. Then we can move this right there. Cool, so I think we can start now. And then the first question, we're supposed to complete our debtors collection schedule for March to May 2021. Okay, so the first piece of information that we're going to use is information A and B. So information A shows us the total sales and cost of sales, which are those figures that we're given there. And then we are told that goods are sold at a markup of 75% on cost. And then credit sales are expected to be 65% of total sales. Now, expected debtors collection based on the past. So 40% collected in the month of sale, less 6% discount for early payment, and then 50% collected in the month following the month of sale. And then 8% collected 2 months after the sale, and then 2% regarded as uncollectible 2 months after the sale. And then I think that's enough information for us to begin. So we are given your January. So January, you can't do anything in April because there's Feb and then there's March, because this is the first month, this is the second month, and then the third month. What did they say about that? 2 months, and then in the third month it's 2% regarded as uncollectible. So in April we can't collect anything. Same in May. And then in Feb we have April, and then we have March as the first, and then you have April as the second month. So the second month already we given, and May becomes the third month, and we can't do anything on May. We can't collect anything. All right. And then now we move to March. So moving to March, the first month after the sale, it's gonna be April. So the first month, which is 50% collected in the month following the month of sale. Are we given anything? Yes, we're given both for March and April. And then we look at May. So May, we have April, we have May, because May is the second month after the sale. So it's 8% collected 2 months after the sale. So here we're supposed to calculate 8% times your credit sales, which is 364,000. And then let's see what we get on our calculator. So that should be 8% of 364,000. Okay, let's just see what that gives us. 8% times 364,000, which is 29,120. I think okay, yeah. And then we move on to April. So in April, we're given March, April, and May. So we're given the 3 months. In the 3 months, you have your first month as your first month after the sale, as okay, so March has passed now. First month, which is obviously just May. Okay, so you can't do anything in March. And then in April, you're already given the amount. And then May is your first month after the sale. Let's look at our information. It says 50% is collected in the month following the sale. So we're supposed to calculate 50% of 409,500. That's how you get it. Okay, and then the half of that should give us 204,750. And then now we're going to May. March has passed, April has passed, but we're not given credit sales. We're supposed to calculate credit sales. And if I remember correctly, they said 65% of sales are credit sales. All right, here. And then our sales for May, it's 770 100. It's 770 100. 773 70,000. So that should give us 500,500. 500,500. Okay. Cool. Now in May, what are we supposed to collect, or what are we expected to collect? It says 40% collected in the month of sale, less 6% discount for early payments. So we're supposed to collect 40% of 50,000 or 500,500 times a 6% discount. 6% discount is secluded. Now that simply means from the 100% that we're gonna get, so we're taking all of this as 100%. From the 100% that we're gonna get 6% less, which is 94%. Then you're gonna multiply this times 94% because of the discount. So that's your calculation. This is your calculation for the debtors that we're supposed to collect in May. So if you just plug that into your calculator, so that's 40% times your credit sales times 94%, that should give you 188,188. These numbers look so weird, but let's just do the calculation one last time just to confirm if our numbers are correct. Times 40% times 94%. Oh, definitely correct. Okay, so now we can just simply add all these and get our final answer there. Okay, plus 29,120 plus 204,750, which is 422,058. Okay, so we move on to our 3.2. 3.2, we given information about purchases of stock. So our purchases of stock, they are talking about that they're saying all purchases of stock are on credit, and then trading stock is replaced in the month of sale. This is very important. And then a fixed stock level is maintained. Creditors are paid in full in the month after purchasing stock. Okay, so now we're just going to move to your cash sales for April. If they said credit sales are 65%, then that simply means that 100 minus 65%. These are your sales. These are your credit sales. And then what's left are just simply your cash sales, which happen to be 35%. So here they want your cash sales for April, which is 35% times your total sales of Your total sales in April of 630,000. 630. And then you do a quick calculation so that you can be able to get 35% of 630,000, which is 220,500. Then the next one says B, increase in loan from Janet to Janet Bloom. You go to your information. Okay, so we were given our budget. Right. Send this question. Right. So our loan, the information that we given says Janet Bloom has provided a loan to the business at an interest of 9% per annum. Interest is not capitalized, and 1/3 of the loan is repaid to her on 31 December each year. So as the company was still experiencing cash flow problems owing to the coronavirus lockdown in 2020, Janet agreed to increase her loan to the business on 1 April 2021. So what was happening here? We're looking at your extract from the cash budget now. The loan is here, okay, and we were told about interest. So interest before the increment, remember that she increased the loan on the 1st of April, which is here. So the interest that we were paying per month, it was 1,365. Now we're paying interest per month of 2,625. Right. So let's calculate the difference of the two interest amounts and see how much interest we have how much more interest we have incurred between the 2 months, so that we can see how much of the loan was actually the increment. Okay, and then we can just simply calculate. So it was 2,625 minus this was 1,365. So that's 1,365. Let's see the difference between the two loan amounts, interest amounts. 365, which is 1,260, multiplied by, we want 100% over 9%. We want the loan amount. This is the loan amount, what we want over what we know. We know the interest because the interest is calculated from the loan amount, right? And then we move on. We say, because this is monthly interest, we are going to multiply by 12 here to get the full yearly interest, the interest per annum. So now it's gonna be times 100 over 9 times 12, which roughly gives me, okay, I think I left out a number. Let me check once again my calculation here. Okay, it's 1260 times 100 over 9. Just redoing my calculation. Okay, there we go. It's 168. Alright, so that's 168 increment. And then for C, our salaries for April 2021. Okay, so we're moving to our information on salaries. It says salaries of sales assistants. So the sales assistants all earn the same monthly salary. They were promised a 5% increase in salaries with effect from 1 April 2021. And then the business employed 2 sales assistants in March and planned to employ an additional assistant from 1 April. So in March there were 2, and how much did they earn? They earned 22,400. So one is supposed to earn 11,200, which means even the third one is gonna earn 11,200. But remember that they were promised a 5% increase from this amount. All right, so if you're adding a 5% increase, it's gonna be 11,200 multiplied by 3 people times 105%. I hope that makes sense, because there are 3 employees. They're supposed to get a 5% increment, so it's gonna be 11,200 times 3 times 105%, and let's see what we get. Times 3 times 105%. Oh, okay. Let me try this again. 3 times 105%, which gives me 35,280. Cool. Now we're going to D. We're talking about rent expense for March 2021. So what does the rent adjustment say? Information. So it says rent a number of customers. The directors secured premises in a local shopping mall from Propco Ltd with enough space to cater for the expected number of customers. Rent is charged per square meter according to the floor area. The rent increased by 11% per annum commencing on the 1st of April. So the following figures were identified for planning purposes. So that is your given information. Now going to our extract from the cash budget, our rent expense. In March, we don't know. In April, we know that it was 39,960, but they told us that there was an increase of 11%. So this is your 111. This is your 100%, because this is after the increment. So what we want over what we know. So it's 39,960 times what we want over what we know. So that should give you times 100 over 36,000. Alright, and then 3.3 says explain the decisions that the directors took regarding the budgeted and actual expenditure for advertising in May 2021. Quote figures or calculations. First things first, when you're looking at your advertising, let's check. So we were advertising, we budgeted an amount to use for advertising at 30,000, but our actual amount was 42,000. Right. And then when we look at our monthly budget for advertising in April, we budgeted 12,000, but then they decided to increase our budget in May to 30,000. So they actually increased our budget amount by 18,000. So we can just talk about that first. So quoting figures is really important. Budgeted amount increased by 18,000. So it increased by 18,000 between April and May. You can just simply state that it was from 12,000 to 30,000. Then your second explanation could be your comparison between your budgeted amount now and your actual amount for May 2021. So what's happening here? We budgeted 30,000, but we ended up spending 42,000. So when it's advertising, it's not really a bad thing, because if you could also look at the number of customers that the business had actually gained is more than what your actual amount is actually more than your budgeted amount. So your actual amount, the expenditure is greater than what the business, okay, I just say the business budgeted. So it is greater by, let's see the difference, 12,000. So it exceeded its budget by 12,000. I think that's enough information. And you can also quote your figures that it was 30,000. So budgeted, and then it was 42,000, your actual. Okay. Then now we're moving on to another question, and then it says the directors ask you for a report on the effect that the advertising decisions have actually had on customers, really important, on customers and sales in May 2021. So the first thing that you're supposed to look at is your customers. What happened to your customers in May 2021 if you're comparing? So our customers were 110 that we budgeted to have, or we expected to have 110 customers, but we actually got 135 customers. So number of customers expected, okay, or we could just simply say number of customers that the business had exceeded the number that the business expected. Then you can state the difference, which will be your calculation. So just simply say it's 135 minus 110. So 135 minus 110, that should give you 25 customers excess. And then sales, let's see what they have, and sales information. So our sales decreased from 770,000 to 690. So what's the difference? Yeah, let's calculate the difference. So it's 770 minus 690. So a difference of 80,000 bucks. So sales decreased from the budget of 770,000 to 690,000, a decrease of 80,000. And I think that's all. So now you explain how the decline in the national economy has affected the average amount that customers spent in May 2021. So the average amount that customers spent. So you're actually looking at your sales. How much did you make per customer? That's your average amount that each customer spent. Now, your average, okay, so you had 135 customers. Let me just erase this so that it can be neat. So your average, you're gonna say 690,000 divided by 135 customers, and let's see what we get. So it's 690,000 customers. Oh, sales. These are sales. Sorry about that. So sales over 135 customers. And let's see how much each customer on average is supposed to spend. by 135. So each customer is probably spending 5,111,11. So you can just simply say 5,111. Right. But here, if you could look at your information, they were saying something. Oh yes, yeah. It said expected average sales per customer. What we expect to sell to each customer. It was 7,000. So each customer spent 5,111, but now it's so much less than what we expected. Okay. So we're supposed to explain. Now, in the national economy, let's say maybe there's inflation. This has to do with a little bit of economics. You're just gonna say your customers have less buying power now because they really can't buy more. So customers have less buying power. Okay, so this needed you to think outside the box, because as much as we have used more advertising but our customers still are not spending more. We have more customers, but even though we have more customers, but they're not spending enough to increase our sales, the sales that we expect as the business. So I think that will just shine the light in your brain and help you think about these kind of situations when you're writing a test, exam, or any other practice paper. So now it says comment on whether the consumable stores have been well controlled or not. Okay, so our consumable stores, what do we use consumable stores for? So in this case, we're using our consumable stores for repairs. We are repairing our dressers. Now let's see, let's compare if we had used more or less on our consumable stores. So our consumable stores, we budgeted 4,200, but we ended up using 5,520. But what do we use them for? We're using them for repairs. And then in repairs, we also making money. We receiving income when we do repairs. We're gonna compare that to our fee income. Okay, so our fee income, it was 15,000 budgeted, and then we actually received 21,000. So that simply means we have used our consumable stores in a proper manner. You can go as far as calculating how much of this is the percentage of 15,000. Okay, we can just start by doing that. 4,200 over 15,000 times 100. Let's see how much that gives us. 4,200 over 15,000, which is 28%. And then calculate now 5,520 over 21,000 times 100. Okay, 5,520 over 5,520 over 21,000 times 100, which is 26.2. I'll just say 26.3%. So here, our consumable stores, we budgeted to use consumable stores at 28% of your fee income, but we ended up using consumable stores of 26% of our fee income, which means our consumable stores are well managed. And how do you structure your answer now? So you'd say consumable stores, because we've done our calculation already. I'm not going to include it here, but when you're doing your paper, you can just simply include it here. Consumable stores were budgeted at 28%, but only 26.3% was utilized. 26.3% was used. And then what else can you add? So you can also state the obvious. Consumable stores actual amount exceeded the budgeted amount. I'm trying to write as fast as possible because that's how you're gonna do it when you're doing your past papers, you're doing your exam, or you're writing your tests. That's how it's actually gonna be, because accounting really needs you to write as quickly as possible. So consumable stores, the actual amount exceeded the budgeted amount by so you're supposed to calculate the difference between 5520 and 4200. Let's calculate that quickly. Minus 4200, which is 1320, by 1320, which is from, now you're stating you're quoting your figures from 4200 man to 5520. Okay, so the last question says calculate the reduction in the area rented in square meters. So reduction in the area, so I think we're supposed to read some kind of information there that we left out. Should be 3.4. yes, yeah. So refer to information F and H. Rental and customers. The owners of the property, Propco Ltd, informed the directors of Blossom Ltd of the increase in rent planned with effect from 1 April 2021. So the rent was being increased, remember. Now, in order to economize on rent, so economize simply means if they're increasing the rent, we are going to decrease the space that we rent in order to pay, not really to pay, but to receive value for your money. You're supposed to get this actual space that your money deserves. So you can't be paying more and receiving less space. And so it says, in order to economize on the rent, the directors asked the owners, Propco Ltd, for a reduction of the area rented from 1 May 2021. So Propco Ltd agreed to this request. Now calculate the reduction of the area rented in square meters. So we're still looking at May, right? And then our rent expense that we budgeted in May, remember it was 39. Let me use a different color. So it was 39,960, but we ended up paying 31,968. That simply means they have reduced the space that we used to rent. So now we're not renting the same amount of space, and we are supposed to pay less rent, of course. And then I think we can just simply do our calculation here because the figures are just as close by. Cool. So we used to pay 39,960, and here we're supposed to get it says floor area, it's 120, we don't know. So your rent expense per square meter, you can just simply calculate here. In April, our rent was also 39,960, and you can get that by dividing 120. Let's see how much is your rent per square meter, which is 30. So it's 333 rent per square meter. Okay, so that's your rent per square meter. Now you have your 31,968. Okay, so let's check what our rent was decreased by first before we can get the actual space. So it's 39,960 minus 31,968. Let's see what that gives us. 39,960 minus 31,968. That gives us 7,992. So this is decrease in rent, but we know that what we want is square meters. How much space did we reduce? Now we know that each square meter will cost the business 333. So how do we get the actual area? So it's 7992 divided by 333. Okay, let's calculate what that gives us. So which is 24 meters squared. So the business decreased rent by 24 meters squared. So I can just simply take this calculation to our answer book there. So let's just erase this. What I want to do is just simply take that and put it there. So our final answer is 24 meters squared. And that's it for tonight. That was your cash budget. I hope this was really helpful and productive. Thank you so much for spending your time and watching this and being with me today. Don't forget to subscribe, like, share, and drop a comment on anything that you need help in accounting with. I am here to help you guys ace accounting. Thank you so much once again for watching. I really hope I will see you in the next video.